Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market update. Hope everybody is doing very well today. And in today's markets, guys, what a crazy day indeed. Lots of volatility from the FOMC meeting with Jerome Powell. As you can see here on the chart, this is the SPY. SPY during the meeting with Jerome Powell up 1.2%. Jerome Powell was actually largely nice to us today. But then after the meeting, for no reason at all, the market's coming all the way back down 1.3%. So a very volatile day indeed. And in today's video, guys, we're going to be recapping exactly what Jerome Powell said during the conference today. A few key points to take away. We'll be covering that together. Second, we're going to go through a few company earnings together as well. Got some prepared for you. Today's earnings, we're going to cover Mastercard and Qualcomm, two of your bigger names. And we're also going to quickly do a little bit of a dive here into Etsy and Marriott hotels, very briefly, however. And then after that, we're going to take a look at our technical analysis in terms of our rundowns on major indexes and big tech names, and conclude once again with my portfolio and see how badly I got destroyed by Starbucks. So all in all, guys, let's take a look at today's video. Hope you guys enjoy. So the SPY down 0.32%, QQQ down 0.72%. All across the board here, guys, it was a very mixed day indeed. Some of your big tech names did perform well. Google, Meta, Amazon, and Microsoft. Apple pulling down ever so slightly. It was actually up during the day during the Jerome Powell speech, but then the markets kind of flipped into the end of the day and Apple ended negative. Semiconductors having a negative day overall. That was largely due to AMD's earnings coming in yesterday lighter than expected and really weighed across the industry as a whole. However, the Qualcomm earnings that we got in the after hours were a little bit of sigh of relief for your semiconductor bulls. They actually did very good after their earnings. We'll take a look at those briefly. In terms of healthcare as well was fairly mixed across the board. Financials didn't have a significantly good day either. All in all, guys, a very mixed market today for a very volatile session. Now, in terms of the one-day relative, you can see that even better, the market was really mixed, split kind of down the middle. Utilities, communication services, healthcare, financials, all putting in somewhat decent gains. To the downside, we did have consumer defensives, technology, and energies as your loss leader. On the 1 week relative performance, where does that make us stand? Well, still relatively down overall here, guys, right? Still in the context of that weekly consolidation. And it just goes to show here on your 1 week relative performance, nothing except for utilities and healthcare is net positive over the last week. Everything really continuously taking a bath, even despite our last week's nice rally, still hasn't been enough to erase a lot of the damage that was done at the early part of last week. So before we get into more technical analysis, guys, let's take a look at exactly what Jerome Powell said for the charts to go up and then completely down like this. Very volatile day, but just to note, the VIX, the measure of volatility, didn't actually move that much on the day. You would have expected to see a VIX spike over the course of the day because of the volatility in that news event with Jerome Powell, but it really didn't do much as a whole. Now, in terms of what Jerome Powell said, well, here we go, guys. Let's recap it. Fed meeting recap. Powell pretty much rules out a hike as the central bank's next move. A lot of people were worried about the potential of a hike on the table after heightened inflation reports January, February, March, and April, but Jerome Powell casually just took that off the table as a whole. So let's dive into the details. Few key factors that he did raise as some key points today. Now, number one, he said that politics is not a factor in rate decisions. So obviously it's an election year, and obviously a lot of people think that sometimes the Federal Reserve is politically motivated in its decisions, right? Wants to sway people one way or another, depending on how it wants the results of the election to come in. Powell reiterating now, of course, guys, he obviously has to stay unbiased, right? You can come to your own conclusions about this, but publicly, he did say that that's not the case. The pending election just isn't part of our thinking. It's not what we're hired to do. So take from that what you will, but Powell obviously reiterating publicly that it is not their job to meddle into politics. Now, second, Powell downplays the stagflation concerns, right? That is the fact. Stagflation is when inflation stays flat and also wage growth stays flat and the economy as a result either stays flat or starts contracting a little bit, right? Here's what he had to say about stagflation, which is a major concern. I personally answered a few of our subscribers that had concerns about stagflation. One of the key things you need to watch out with stagflation, guys, is wage growth. You cannot have stagflation in an economy where wages are continuously growing, such as the case right now. So we're not there yet. Here's what Powell had to say about it. Last week's GDP report showed slowing overall growth, but solid price increases, raised some concerns about US entering a period of stagflation, but Fed Chair Jerome Powell downplayed that idea on Wednesday. I don't really understand where that's coming from, he said. The central bank chief pointed out that by some measures, economic growth is at 3% and inflation is below 3%. So he's referencing the GDP print last week, which came in at about 1.6%. We went over that on the channel. And if you were to exclude your net deficit in imports and government spending, the economy actually grew at 3% overall. That's what he's referencing right here. And inflation below 3%, he's obviously referencing the preferred Federal Reserve gauge, which is the PCE report, hovering right now around 2.6, 2.7. Now, that's what Powell said. I don't see the stag or the inflation. Such a nice quote from Jerome Powell, right? Now, next point. Powell says it's unlikely the next move is a rate hike. Federal Reserve Chair Jerome Powell ruled out the possibility that the next policy move after its June meeting will be an interest rate hike to combat inflation. I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. That's what he had to say about it. Asked about what it would take to have a rate increase, Powell said, I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we are seeing. In other words, guys, he needs to see inflation really start making leaps and bounds to the upside, which is just not happening right now. Sure, we do still have a few key sticky elements in inflation, such as services, but for the large part, guys, it still is in an overall downtrend in relation to the peaks of 2022. Now, another point right here, Fed is not gaining greater confidence on inflation so far this year, Powell says. So finally, we knew he had to address the higher than expected results of inflation Jan, Feb, March, and April. Here is him addressing those concerns. He's saying that he didn't have, that those data points did not bring him greater confidence, but still not saying that it's a problem. So very, very thin line between the two. So far this year, the data have not given us that greater confidence in terms of moving inflation down to 2%. The Fed chair then said the central bank was willing to sit tight until the inflation situation changes. So still being data dependent. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target federal funds rate for as long as appropriate. Once again, guys, higher for longer, no changes there. Also, Fed is watching for labor market changes. That's something as well we've said on the channel, guys. Powell will really only respond in terms of decreasing interest rates quickly if the economy or the jobs market deteriorates, and he reiterates that right here. We are also prepared to respond to an unexpected weakening in the labor market. He noted that the central bank's dual mandate, which includes both stable prices and maximum employment. So basically saying we have the tools necessary if ever the jobs market falls off a cliff, they will be cutting rates. That was a hint at that. And now a few last points here, guys, and we're almost done. JP Morgan's David Kelly, more confident rate cuts will begin this year. And this is a very good point by him. So take a listen. The Federal Reserve gave a slightly dovish message when it decided to cut the Treasury runoff from its balance sheet to $25 billion from $60 billion, said David Kelly. So what they did today, this was not expected, is they are now tapering the runoff of their balance sheet, otherwise known as a reduction in quantitative tightening. If you don't know what those words mean, it's very, very simple. In times where the economy is in a nice expansionary phase, back in 2010, after the Great Recession, essentially what the Fed started doing is it started buying assets to backstop the economy. That was known as quantitative easing. So progressively, every single month, it would buy bonds and buy equities and shore those on its balance sheet. And then in periods, guys, where the economy is slightly contracting, the Fed is, or the economy, or when interest rates are high, but the economy is still good, such as a period right now, the Fed takes it upon itself to offload all those assets that it bought when times were good. Now it's offloading them into the market and reducing its balance sheet, otherwise known as quantitative tightening. Either one of these policies, guys, either improves market conditions or reduces favorable market conditions. In this case, the fact that they're finally reducing the runoff of their balance sheet, meaning that they're going to stop dumping assets so aggressively into the market, that they started in 2022, by the way. Now that they're finally done, it leads us to believe that potentially this could signal a bottom in the bonds market and continued strength for equities. So The fact that they want the extra $5 billion, it probably doesn't sound like a lot, but it does say that they are trying to send a message here that they are not going to be too hawkish. It gives more confidence they won't hike again, but they will eventually cut rates this year. This is true, guys. Usually the Fed does stop. Well, I mean, this is the first time that interest rates have really increased, but in theory, the Fed should stop, should really stop dumping assets onto the market so aggressively when it's at the final stages of the rate hike cycle and when it's about to cut interest rates. Now, do I have one last point for you guys? No, that's pretty much it. I thought I'd highlighted something else, but that's pretty much the gist of the things today here, guys. So Jerome Powell acknowledging that inflation is still a problem and that the data reports that came out since the beginning of the year doesn't really push them forward to decreasing interest rates anytime soon. They still want to sit back and watch what happens. That being said, he did say that the jobs market is still healthy and the economy is still healthy as well. And they aren't tapering down on their quantitative tightening. So they're going to stop dumping assets so aggressively in these markets. So hopefully now traders can start finding bids, especially in your bond market. All in all, guys, a very decent meeting from the Fed as a whole. So that is pretty much all the news from the Federal Reserve meeting today. Now let's jump into some company earnings before we do some technical analysis, shall we? So the first one I have prepared for you guys, we're going to take a look at Mastercard. And Mastercard came out with earnings this morning. They actually did very good. We were thinking that they were going to do very good because of how American Express and Visa reported over the last 2 weeks. That being said, the stock, although they did good, was down about 2% in the day's trading. Take a look at their earnings, guys. They beat on EPS by about 2% and did have a decent little beat on revenue here. Not that much, but still a beat on revenue. In terms of Mastercard, guys, this company needs no introduction whatsoever, right? Tremendous net margins, tremendous amounts of free cash flow as well. And take a look at this consistency in EPS growth and consistency in revenue growth. This is such a boring company, guys. It is pretty much, it's an oligopoly. Them, American Express, Discover Financial / Capital One, because now they're together, and Visa, right? These companies control the credit processing game. And it's very, very hard for new entrants to come into that market and steal away market share. That's why I love companies like this. They're so consistent and so predictable. They're pretty much borderline boring. And the report from Mastercard today was literally just that. It was such a boring report. They just continued to beat and they didn't signal for any consumer spending weakness either. So let's take a look at some of their financial headlines for the report and you'll see why I love this company so much. So reported net income, their bottom line, 28% year over year, slightly below the estimate, but still 28% increase in reported net income year over year for Mastercard. Such a big company still able to do numbers like this. Fantastic. Diluted EPS up 30% from the previous year. Net revenue, 10% from the previous year. Operating margins, right? They already have amazing operating margins, still finding ways to increase those. 56.8% versus 54.6%. Very, very good. And once again, they just continue doing what they do best with all that free cash flow, repurchased $2 billion worth of shares. All in all, guys, consistent revenue increases, consistent net income increases. That's what you want to see from a company like this, guys. And if you don't have Mastercard in your long-term portfolios, I highly suggest looking into one of the credit card payment processing companies, Mastercard, Visa, American Express. They're just so consistent, right? It should be the backbone of any healthy portfolio. The largest asset managers in the world, whether they're private equity, hedge funds, or even indexes, guys, are usually overweight the credit card companies just because they're such an easy play. So here's what the CEO had to say about the results. CEO Michael Miebach highlighted the continuous growth in revenue and earnings, driven by healthy consumer spending and strong growth in cross-border volume. Their international volume grew 18% year over year. Fantastic. The company also reported a 16% increase in value-added services and solutions net revenue, reflecting strong demand for Mastercard's consulting, marketing services, loyalty solutions, and fraud and security capabilities. So really doing the best at really monetizing every single aspect of their business. Tremendous company. And here's your outlook for moving forward here. Take a look at this, guys. This is so important. Looking ahead, Mastercard is poised to continue its growth trajectory, supported by strategic investments in technology and a robust operational framework. The company's performance is indicative of its resilient business model and ability to adapt to changing market dynamics, ensuring sustained growth and profitability in the competitive payments industry, aka we are a boring company and we will just continue operating business as usual, regardless of what's happening in the overall economy, regardless of what's happening with geopolitical conflicts. People will still use credit cards, guys. So such a solid company. They are still now down about, almost 10% from the all-time highs, representing an amazing buy the dip opportunity for a company that is currently in a gorgeous monthly uptrend, just looking for the monthly higher low for further trend continuation, guys. Nothing wrong with this business at all. If we take a look at the valuation here, the valuation for Mastercard is a little bit rich, similar to Costco, similar to Visa, because these companies are so consistent and so profitable. They tend to garner higher multiples from the market just because they are so easy to predict. They always trade at a premium. It's very tough to find Mastercard other than times of complete disastrous recessions, right? Or times like COVID when they spiked down, or 2022 when we had the great asset sell-off, right? Well, unfortunately, guys, it's tough to find Mastercard at discounts just because they're such a strong company. So in terms of their revenue growth and EPS growth over the next 3 years, healthy revenue growing 11.5%, EPS growth 14% per year. Very good. It gives them a 2024 forward PE at their current price of about 440 of about 30.5. That's really standard for Mastercard. As a matter of fact, usually they trade higher than that. Now, their forward PEG ratio, this should be PEG ratio. So their 2024 forward PEG at 440, so their PE as an expression of their growth rate is about 2.18. That's really average for Mastercard. I mean, in the grand scheme of PEG ratios, over 2 is a little bit high, but Mastercard never really dips, guys, into the lower valuation levels unless we really get overall market sell-off, heavy continued sell-off conditions, right? So this company does always remain a buy in my books. It would be an even better buy if we could find a dip down here into prior support around the 415 level. That will be an even better buy, but I see no problem in buying Mastercard at any point in time. This is the type of company you can really dollar cost average into every single month, regardless of price, and you're sure that your return on investment will be fairly healthy over the coming years and even, dare I say, decades. So very good. Comparing them with their peers, Visa, you will see Visa has roughly the exact same valuation, PEG ratio of about 2.24, right in line with Mastercard, and even American Express, which has had a significant rally up to the all-time high. American Express's valuation across its peers is actually one of the cheaper ones at 1.62 PEG, and we did this valuation, guys, pretty much after their earnings at 2:30. They're roughly there as well. So the cheapest one of all of them is American Express, but I'll remind you, American Express doesn't have as high margins as Mastercard, right? So American Express only has margins of anywhere between 12 to 15%. The margins on Mastercard, take a look at these margins, right? Mastercard margins are sometimes as high as 50%, 44% as of last year. And the margins for Visa as well are tremendously high, guys, at about 45, 50% every single year. So that's why those companies trade at slightly higher valuations. They're just more profitable on a dollar per dollar basis, right? So hopefully that was educational for Mastercard earnings. I wish there was more to say, guys, but I mean, such a boring company. The reason that they dropped 2% is because they said that the revenue guidance may come in a little bit weaker, but here's why. Not because consumers are slowing down spending, not because people are shying away from Mastercard as a brand. No, because of currency fluctuations. That was the reason for your 2% drop, because they say that revenue will dip slightly in relation to guidance because of currency fluctuations. That's how boring the company is. So hopefully that was educational for you guys. Now, our second earnings that we want to take a look at here, guys, is going to be Qualcomm. So big semiconductor play. Qualcomm had earnings after the bell today, and they actually did pretty good. So Qualcomm, what they do is they manufacture modems and microprocessors for a couple of different things. Number one is going to be cars, and number two is going to be smartphones, tablets, and laptops, accessories like that. They used to have an exclusive partnership with Apple about 2 years ago, before Apple started manufacturing in-house chips of its own, and that's what they were known for a very long time. So Qualcomm coming in after the bell, EPS beat here by about 5%, and a slight little miss on revenue, but the beat was good enough here, guys, that this company is up in the after hours, roughly about 4% from their closing price. So very decent earnings by Qualcomm. Nothing bad to say about the company per se. Really doing a great job in the current environment. So here's your highlights. Qualcomm gives better than expected revenue forecast as company pushes AI-powered smartphones. We started hearing about this from Apple about a month ago, and we also started hearing about this from the Android system pushed out by Google. Obviously, Google doesn't make its own phones, but it has the operating system, right? So Google and a number of other smartphone manufacturers that use Android, such as Samsung, are also heavily pushing towards AI-powered smartphones. Now let's take a look at the gist of the article. So handset sales rose 1% year over year to 6.18 billion. So most of the chips that they make are for handheld cellular devices, right? So that's good. It's their largest line of business. So nice to see that it actually came up, signaling that the smartphone market may be recovering after a few years of post-COVID slumping. I'll remind you guys, if you don't remember what happened to Qualcomm, exactly like the article just said, they had a little bit of a slump coming out of COVID. You can see that best in their massive EPS that they got, massive EPS boost that they got after COVID, all the stimulus money. People are obviously out buying the brand new phones, and that gave them a tremendous EPS and tremendous revenue bump during those 2 years. But since then, it's been very tough to compare with those periods. 2023 was kind of getting back to standard growth for Qualcomm. And now we should be back to a decent growth trajectory through 2026 on EPS and through revenue as well. The company is relatively profitable for a company that manufactures products. Their average net margins are roughly about 20%, averaging over the last 5 quarters. So very, very solid company. And in terms of their financial statements, are they a healthy company in terms of the debt that they have? Well, they are a fairly healthy company, guys. They don't have too much debt. They do bring in a significant amount of free cash flow. So if we take a look here at their last quarter ending, they only had about $16 billion of debt, $8.5 billion of cash and cash equivalents, and they do build up significant free cash flow on quarter-over-quarter basis. So all in all, the balance sheet is healthy. So EPS expansion, revenue expansion, balance sheet is healthy, turning the quarter now out of the little smartphone and car slump that they had over the course of last year because of elevated inflation. And now they're finally rounding the quarter back to the company that they were in 2020, right? So Qualcomm reported fiscal second earnings on Wednesday that surpassed Wall Street expectations and provided a strong guide for the current quarter. Qualcomm said it expected between 8.8 billion and 9.6 billion in sales in the current quarter, higher than Wall Street expectations of 9 billion. So all in the guidance, guys. The reason that they're up is because they provided decent guidance. Analysts were looking for guidance of 217 per share in EPS versus the company's forecast of between 215 and 235. So the midpoint of this is 225. Higher than the expectations. So not only did they beat on the current quarter, but they actually raised their expectations for guidance into the next quarter. Very, very good report by them. Qualcomm's most important business is its handset business. It sells processors, modems, and other parts for smartphones, primarily Android devices, but also some modem parts in iPhones. Qualcomm called out strong demand for premium tier smartphones that require the most advanced chips, especially in China. It said quarterly revenue from Chinese phone makers jumped 40% from the year earlier period. That is very good. And we heard about this, right? When we talk about Apple a lot of different companies such as Samsung, LG, Huawei, really stepping up their game to cater to the Chinese market that want the best and latest technology. We have not seen signs of weakness in the Android premium market in China, said the CEO. Now, moving on further, the company's automotive business, which sells chips to automakers, also showed signs of growth, rising 35% year over year to 603 million. Qualcomm said it expected consecutive double-digit percentage growth in the division in the current quarter. Very good. Revenue in the Internet of Things business, lower cost chips and chips for virtual reality declined 11% year over year to 1.24 billion. That's not too big of a deal because it doesn't represent a large portion of their business, but still a decline. Those 3 business lines, so their chips, their automotive business, and what they call the Internet of Things, those 3 business lines are reported together as QCT. The company's chip business, which saw a 1% year-over-year sales increase to $8.03 billion. Decent. At least they're positive. Last year, guys, they were comparatively negative, to give you guys an idea. So now finally back to quarter-over-quarter and year-over-year positivity. The company's licensing business, in which it collects fees from companies that want to integrate 5G or cellular technology into their products, increased 2% to $1.32 billion from the year-ago period. So nice little bump on that line of business as well. And Qualcomm does what it does best as usual with that free cash flow, paid $895 million in dividends, and repurchased $731 million in shares during the quarter. Very, very decent report. Nothing bad to say. Company really rounding the curve back to its former growth phase that it had really back here coming into the pandemic, right? So really getting some good boosts here. Qualcomm, on a technical basis, guys, also is looking very, very healthy. very juicy monthly breakout right now. If we do get continued monthly consolidation with the rest of the markets, I would not be opposed to playing Qualcomm in this lower area right here. 150, 145 seems to be like a great area to play the monthly higher low for continued trend expansion as they now continue to expand their business, become more profitable, and get back to that growth story that they had prior to this kind of artificial boost in their revenues, right? So now they're back to a more organic growth path, and it looks very good for the company as a whole. I do like Qualcomm. It's not one that I hold personally, but I'm never opposed to swing trading it if it does get to the prices that I want. In other earnings, guys, we did have a few here by Etsy and Marriott. So I'll remind you guys, Marriott's one of the best hotel brands in the world with Hilton. They have an extremely good loyalty-based program, and the travel sector, guys, continues to be an outperform. Take a look at the performance from Marriott stock over this year at all-time highs. Gorgeous monthly uptrend, just looking for the monthly higher low for further trend continuation. I'm not going to take you through their earnings, but this is why the travel industry is so solid, guys. They missed on EPS by only 1.5%, but they did beat on revenue. It was a very solid report for them. You can see, guys, that although this company did get hit somewhat during the pandemic for obvious reasons, right? They are now back to streamlined EPS growth over the next foreseeable future and streamlined revenue growth as well. Very, very solid brand. Still one of my favorite hotel chains, just edged out by Hilton. I like Hilton a little bit better. Their financial metrics are a little bit better, a little bit more solid, but travel as a whole, guys, is such a good industry to be in over the course of this year. And they reiterated that consumers continue to have demand for their products, as opposed to a company like Etsy. And the reason I'm doing these two companies back to back, guys, is this that I brought up on the channel in the past couple of weeks, guys. Need to remember our themes while we're in this consolidation phase in the market. And 2024 as a whole, right, we have to remember what are the best themes to trade. AI, so semiconductors, big tech, and profitable tech. Experiences, travel, casinos, and hotels. These have all been doing very good. Healthcare and financials as another rotational trade. The ones that are tough to trade, EVs, solar, unprofitable tech, or small cap tech, and consumer discretionary and China, right? So Etsy, unfortunately, is in one of those consumer discretionary categories. We saw what happened with Pepsi. We saw what Coca-Cola reported. We saw what McDonald's reported, and we saw what Starbucks reported, right? The consumer is not willing to pay money on things they do not need right now. And unfortunately, although I love Etsy as a brand, I like their website, I like the functionality, I like what they're trying to build, unfortunately, guys, they're just not a favorable trade. And they reiterated today on the call that they are worried about consumer discretionary spending for the rest of the year. And because they said that, take a look at this, guys, stock tumbling 13% in the after hours, now pretty much down. Really down here, $61, which kind of puts them towards their all-time lows pretty much, right? Well, not the all-time lows, but the lows that they've had pretty much since their tremendous rise in the pandemic. So very, very unfortunate for Etsy, but just the case in point, guys, that there are favorable trades for this year and then that there are trades that are going to struggle. Do I believe that Etsy is a good business? Yes. Do I believe that this stock will eventually recover when consumers recapture some discretionary income? Yes. But be careful, guys, what you're wishing for, right? If you think that consumer discretionary income is going to all of a sudden snap your fingers and people are going to get a boatload of money again, it's not how it works, right? It's going to take some time for people to shift their purchasing habits back to spending on consumer discretionary items, right? It takes a lot of time. That's why I don't believe there's any urgency to be buying stocks like Etsy, like McDonald's, like Coca-Cola, right? Companies like this, like Starbucks as well, like Nike even. There's just a lot of time to build positions. So even though you see tremendous discounts, do not rush into the trade, guys. I don't think that it's ready yet. These companies have all guided for the same thing, that 2024 is going to be a challenging year for them. So let them deal with it. And then at the end, when the trade becomes more favorable, that is when we're going to start to strike. And when we need to see that, guys, we need to see consumer confidence back up, and we need to see consumer discretionary spending start upticking. And I'm not talking about 1 or 2 months. We need to see 3-4 months back to back to be able to safely take this trade and ride it for the long term. So hopefully that makes sense in terms of Etsy earnings, right? Etsy missing on the EPS, missing on the revenue, and the guidance was not very good. So very, very unfortunate for the company, right? So we'll just have to revisit this one at a later time. So hopefully all of that was clear, guys, in terms of our earnings. I wish I could do more, but I don't want to keep these videos too long. Now let's jump into our indexes right away. and see what the damage was done today. So obviously, guys, extremely volatile afternoon session, but we do have a nice little increase here in our after hour session in terms of our futures, right? So where do we stand? Well, guys, I don't want to say that a lot of pressure is going to be on Apple earnings tomorrow, but a lot of pressure is going to be on Apple earnings tomorrow, right? If QQQ and SPY have a relatively flat day tomorrow and Apple goes down 4 or 5% after earnings, the SPY and QQQ may be in jeopardy, guys, of losing our most recent found daily uptrends. SPY would be sitting here at about 498. If we lose 498 tomorrow, guys, it'll be a loss of a daily uptrend. That would be your weekly higher low is set. And then we look to the bulls to desperately save this 494 area. If not, guys, we may just run the risk of being rolled over right now. I'll remind you, the size of the bounce on the weekly got up to 50%, which is decent, but not good enough to guarantee the shot at a weekly trend reversal. It's literally the 50% mark, right? Anything can happen. And now, unfortunately, we can see that the bulls are losing ground quickly. So we need to protect these levels tomorrow, guys. If not, we may just end up in further daily downtrend motion, further weekly consolidation, and further monthly consolidation as well. Take a look at the start of the month of May. I would not be surprised if for the first couple of weeks of May, we dip ever so casually into our prior all-time highs of SPY. That would be 475. That's where your monthly moving average as well is. And that would be a sell-off top to bottom of around 8-9%, exactly the same thing as we got pretty much last October. Still maintaining that stance. It's up to the bulls to prove it to us that they want to defend this area with their lives. If they can do that, if Apple puts in some good earnings, we may be able to just recapture this and put some more weekly momentum in our backs. But as of now, guys, it is not looking the best. It is still a time to really be focused on building up cash, building a watch list of companies that you want to own at specific prices. And then when the prices come to you, we pull the trigger, right? Still very overall bullish on this market in the long term, but in the short term, still a lot of uncertainty to deal with. Getting rejected from our area of resistance, getting rejected from our moving averages, not only 2 days ago, but even today after the rally, after Jerome Powell, just getting rejected. So it's up to the bulls to save this tomorrow, and Apple earnings will be a big portion of that. QQQ, same thing, right? So we were looking for the size of the bounce in relation to this most recent leg of selling, which you see best on the weekly, right? The size of the bounce was key. And what we were looking at for the size of the bounce, well, continuation of this daily uptrend. And now the bulls, unfortunately, have come down a lot, right? So similar to SPY, we have come down a lot. The best that we can do is try and reset for the daily uptrend. Same thing on QQQ, but it's really not looking the best right now. A lot is put on Apple's shoulders tomorrow. If we lose the 418 mark, unfortunately, daily uptrend is lost. Sets up the bears for the lower high, lower low. That would just be continuation, guys, of this weekly downtrend that we're in right now. The size of the bounce on QQQ as well was decent, but not enough to guarantee success for the bulls, only bouncing as high as about 50%. So I really would not be surprised if Apple's earnings are negative tomorrow if we just do the classic rollover into the early portion of May, set the weekly downtrends back in motion, and set monthly consolidation in motion as well, maybe bringing us into our prior all-time highs on QQQ. That would be roughly around 398, 400, which, funny enough, also coincides with your 12 EMA. That would be a top-to-bottom sell-off of about 11%. Same thing as we had pretty much back in last fall when we had these similar sell-offs. In my opinion, still just very healthy pullback after 4 or 5 months of rally. Taking a look at financials now. Well, financials, guys, still unable to really make the most out of this bounce attempt. They did a very nice bounce, and now for the past 2 weeks, just been slowly losing ground. We're back now below our moving averages, so it's not looking very good for financials at this point. Still unable to convert into an hourly uptrend. So we'll see. Can they get it done tomorrow? Can we get the hourly uptrend? If we do get the hourly uptrend, we can then say, okay, our daily next move up is underway. Then we look to 4120 to reset this into a daily uptrend, right? Financials was one of the first sectors to put in a healthy bounce, but they never converted to a daily uptrend. SPY converted to a daily uptrend, QQQ converted to a daily uptrend, but XLF still not converting. The worry here for XLF bulls is if ever we take back too much of this move, could set up for the lower high into lower low, and that would just be a potential weekly downtrend in motion at that point for some extended monthly consolidation the rest of the month of May. But I do think any consolidation on financials is very healthy. Just looking for the monthly higher low for further trend continuation. top to bottom, guys, if we do come back into my area of support, that will be about a 9-10% sell-off for financials, a bit exactly like the one we got last October. And we do have a lot of support prior to that, so maybe we don't even need to get back to this green box. Maybe we only stop out here, but still, just the name of the game right now, guys. Healthy consolidation. So it's really up to the bulls over the next few sessions to prove it to us that these daily uptrends are not lost and that these weekly bounces still have some legs into them. As of now, guys, we are still overall in a bearish environment. Weekly downtrend is the case on QQQ. Weekly downtrend is potentially shaping up on SPY. XLF, no weekly downtrend yet, but just to say everything is in weekly consolidation. The bears have control of a lot of weekly timeframes right now. It's just up to the bulls to prove it to us in the next few sessions. How much of those weekly moves can we continue clawing back? So now, moving on to XLV Healthcare. So XLV Healthcare still also struggling, right? Unable to set the daily uptrends similar to what SPY did, similar to what QQQ did. So XLV still bogged down in that respect. It was a daily downtrend, I'll remind you, engulfing move. The bulls had a chance and they're not making the most of it. We fractionally closed above it here, or got above it, sorry, during the Federal Reserve meeting with Jerome Powell, and was quickly taken back. When I see a move like this, guys, unfortunately, it just leaves me to believe that the follow-through move to the downside is most likely coming. At that point, we need to watch out here for the 139.27, get a break of that to the downside tomorrow. Daily downtrend is back underway. A daily downtrend is back underway, guys. That is your lower high being set. You can see we are now rejecting from the 12 EMA. Continuation of the weekly downtrend is likely. The size of this bounce is very weak, guys. Not even 35% worth of bounce. I would not be surprised if this just is indeed a bear flag for further downtrend continuation here, guys. Further downtrend continuation, where could it take us into? Well, this lower area right here, 134. 134 is where a lot of monthly candles previously got stopped out. Just looking for monthly higher lows into potential further trend continuation when the markets really start turning around as a whole. Healthcare had a great start to the year, but has now been in consolidation mode for a better part of pretty much the last 2 months at this point. Now moving on to semiconductors. Semiconductors as well, really falling down here today, guys, right? After those AMD earnings, not having the best time at all. Everything was pretty much down today in semiconductors. So we had the daily uptrend underway, and now the bulls coming down and losing most of it, guys. Double bottom right now. If we were to break 205.65 tomorrow, daily uptrend is lost. That sets up the bears for lower high into lower low, daily downtrend continuation. And that would mean if we do eventually lose this daily uptrend, guys, tomorrow, well, your weekly higher low is now set, and we could potentially be looking for a revisit of these lows. It'll be up to the bulls to protect that. If we just continue this weekly downtrend into the month of May, it would look very logical on the chart for another pullback over the course of the month of May, similar to what we did back here. Get closer to this 12 EMA, right? And set up for the beautiful monthly higher low into further trend continuation when the semiconductor industry picks back up full steam at the second half of the year. At least that's what all of our major semiconductor players have been saying. Slow first half of 2024, and then a very nice boom at the end of 2024, which will continue through 2025. So if anything, this is the perfect time for semiconductor consolidation. Looking very good. Even though the bears are regaining control, if anything, it is a buying opportunity for a lot of companies after we stop this bottoming out process, right? So now moving on to IWM Russell. IWM not having the best day, but at least ending green, 0.21%, giving back so much of the move here. So still looking for that daily higher low. The bulls have still not lost it, 193.80 pretty much. If we were to lose that tomorrow, well, your daily trend is now finished. The weekly higher low is set. And at that point, guys, the bulls really have not put in a sizable enough of move to guarantee their chance of saving these double bottom attempts. So only bouncing about 38.2%, not good enough, guys. If the bears do get follow through, the flush is likely at that point. Then we'll be looking to 187 as our line of defense in the future. In terms of the monthly here, guys, the monthly was looking good, but now it's looking fairly dicey. Your monthly higher low right now is 187.76. For ever which reason we lose this during the month of May, the bulls will have a lot of work to do to get back that monthly uptrend that they worked so hard to get in the last 5 months of trading since November. All in all, guys, as I keep saying on the channel, I just don't think this trade is ready yet. While interest rates are being maintained high, there's just not that many people that are willing to go for growth trades. And I'm not talking about retail. I'm talking about the big money, the institutions, right? They are not going to go for full risk on trade until they have confirmation that rates are coming down and the timing around when they're coming down. And now lastly, the Dow Jones. So the Dow Jones had a good little recovery day today, but pretty much wiped away in the end of trading. Big engulfing move here, guys. So once again, we look to these daily lows, 37,700 roughly. If we were to lose those, right, we'd had a nice daily trend change attempt by the bulls. Couldn't get it done in the last 2 days of trading. This is quickly turning into a weekly bear flag as well. If we were to lose these lows, it would be weekly downtrend confirmed. We have not had a weekly downtrend on the Dow Jones since last fall, so that would be notable to us. If ever we do get that weekly downtrend follow through here, guys, just going to be looking for further monthly consolidation in the month of May, maybe bringing us back into our previous all-time highs, 36,800 down to about 35,500. And to the maximum point, guys, that would be a sell-off on the Dow Jones of anywhere between 8 to roughly 10%. And what we got last fall was pretty much the same thing, right? 8-9% worth of sell-off. So it all makes sense in the context of looking for that monthly higher low for further trend continuation. All in all, indexes still consolidating. The bulls have not lost yet, but it's getting really dicey. The next 2 days of trading will be pivotal to let us know whether our weekly moves up are now finished or whether or not they have more in the tank for the following weeks to come. So very crucial moment in time, the way this week closes. Now, moving on to our Bitcoin, because Bitcoin made a big move today here. So Bitcoin, unfortunately, coming down again and almost breaking through a crucial level here, the $58,000 mark. We didn't close below it yet, but we're almost there, right? So daily downtrend clear as day on Bitcoin. Weekly downtrend continues at this point, which means that we are definitely in monthly consolidation. This candle close yesterday on Bitcoin was not pretty at all. Clear engulfing move, which leads us to believe that monthly consolidation will continue at this point, right? Nobody knows where crypto is eventually going to stop. All we can do is point out the levels. If we were to lose the 58,000, guys, there's a lot of arguments that say we can go back to maybe 50, even potentially even as low as $47,000. That would be, in my opinion, a tremendous buying opportunity. Crypto obviously represents the risk on trade, similar to your Russell 2000 stocks, right? So I don't believe that Bitcoin will get its leg of continuation, at least before another maybe month, even 2 months of sideways, if not downwards consolidation, until inflation starts going away and people get more bullish on the risk on trade, because we now know when interest rates are coming down and how much, right? These risk on assets will have a very hard time flying on their own while SPY and QQQ continue to consolidate. So what we need to see from the bulls at this point, need to see them save these levels and start reversing this back into a daily uptrend. And then we will measure how much of this weekly move down can we recapture, start maybe regaining the weekly. So a lot of work to be done by the bulls. First step is getting back that daily uptrend. We'll keep an eye on this on the channel. Now, in terms of Ethereum is suffering the same fate as Bitcoin pretty much, right? Clear daily downtrend at this point, trying desperately to protect these lows, not close below them, but still in the context, guys, of this weekly downtrend in motion right now, which means that we're still in monthly consolidation. Gorgeous monthly uptrend, just looking for that monthly higher low for further trend continuation. Where could Ethereum bottom if crypto just remains unfavorable here over the next coming weeks, maybe even month or two? Well, we could potentially be expecting a revisit of 25. If we can get a revisit of 25 down to 2,300, really believe that this is such a juicy buying opportunity, guys. That would be a heck of a sell-off. I'm not saying it's going to go down there, but if it does go down there, I'm telling you that I will be buying. So Ethereum, same thing as Bitcoin. What we need to see first is the bulls put in a daily trend change. Until we don't see that, your short-term bears will remain in control of this daily downtrend, of this weekly downtrend as well, right? So unfortunate for crypto, but such is the way the cookie crumbles. It is just continuously a time to buy those dips and just dollar cost average slowly into these positions, right? Now let's move into our big tech names. All right, sorry about that, guys. Got to get the coffee. You guys know the drill. So moving into Apple. So Apple, guys, I mean, price action on Apple is going to be fairly limited because they have earnings tomorrow, right? So they had a very good session on the day today. Coming up most of the day, even into the Jerome Powell speech. And then that last hour of trading really erased everything for Apple. Unfortunately, it's now been 2 days in a row, guys, where in the last hour of trading, Apple's done good throughout the day, and the last hour of trading has just erased everything. So very unfortunate for them. And now we're getting a little bit close to our lows here, guys, right? So Apple still only about 2-3% from its current lows, and the expected move on earnings tomorrow is about 3.5 to 4%. So they do have a little bit of cushion, but nothing is guaranteed. One thing's for sure, guys, if ever we lose this region right here, well, continuation of your daily downtrend, continuation of your extended weekly downtrend as well at that point. And then we will be looking for Apple to maybe potentially bottom out here in the lower 155 to 150. That's if ever earnings are bad. This is your 200-week moving average. Such a gorgeous location by Apple stock over time. You've usually always made money if you were to buy Apple around its 200 weekly moving average. So that looks good. But if ever earnings are a surprise, which would not surprise me here, guys. The theme of this earnings cycle has been companies that outperform go green, but don't go green by as much as we'd expect them to. And companies that severely underperform, that have been coming down for a significant amount of time into earnings. Think of Tesla, right? That just reported recently. A lot of them have been getting bid up after earnings. And then analysts claim, well, everything was priced in already. All the negativity was priced in already, right? So there may be a case in point in Apple potentially having a rally after its earnings. And I actually took a bet on that counter logic that I was talking about. I actually got some Apple calls for this event, right? So in terms of that, guys, in terms of they get a good earnings report, we could see a break of the highs right here, 175.91. That would put us back into daily uptrending categories right now. And then we'd really need to start breaking above these highs that we've been struggling with, right? 177, 178. We need to see a clear break above that in the next coming weeks if you want to really gain some steam on this daily uptrend and really start undoing some of the damage that's been done off of this weekly time frame, right? So it remains to be seen, but a break above 178 after earnings tomorrow would be an engulfing move on the weekly as well, and would put us in very, very good conditions to recapture that daily uptrend. So everything is going to rely on earnings tomorrow. We will cover them on the channel after the close, of course. Now moving on to AMD. So AMD obviously having a bad day today after their earnings yesterday, down about 9%. That was roughly standard with how they opened over the course of the morning today. Dropped a little bit more, came up a little bit, and dropped into the end of the day session. So the AMD support still stands right now down here at about 142 all the way to about 132. This is pretty much our last line of defense. So in terms of where we are right now, battling with the 200-day moving average right now. So daily downtrend obviously is potentially likely on AMD. Big gap after earnings. So we had a daily uptrend, big time flush. Now we might be looking for the lower high and lower low continuation before maybe bottoming out in this region right here. Still not back to daily oversold the same as we were back here. So that may only happen if we continue selling off into this region. Even if we get a little bit of a relief bounce, guys, very likely that the bears are just going to continue punishing this stock. Nothing it can do specifically. It's just overall semiconductors, guys. They need a pullback. And I understand that AMD has pulled back more than most of them. But still, guys, we looked at AMD earnings yesterday, right? Even though their data center business is good, the rest of their divisions are not doing the best, to be quite frank with you. In terms of your weekly, guys, weekly downtrend still is perpetuating at this point. So I'm going to be looking to make some plays on AMD. If we do really come down below 140, I'll be looking at maybe the high 120s to even 130. I think that's a very good location. And I think that would really be maximum damage for AMD. I mean, that would be pretty much 40% sell-off from the all-time highs. And when we had our big sell-off last year, that's pretty much the extent of the damage that happened last year. We were about 30%. So this time is even bigger than that. So keeping a close watch on AMD, still a good location to build some positions for the long term. But until we get some confirmed daily uptrends back in motion by the bulls, we can't begin to start, begin speculating whether or not this weekly move down is finished yet. Stock is still in heavy monthly consolidation. That's why I think it's going to stop in this area. Previous resistance right now, just looking for the monthly higher low for further trend continuation down the line. Moving on to Amazon now at this point. So looking into Amazon, guys, Amazon did very good today, in spite of how, after Federal Reserve Powell was speaking, it kind of crushed the stock. They were actually up all the way to 184 prior to that, ending around 179, which is pretty much the close that they had yesterday leading into earnings. So it's kind of as if earnings never happened. Even though the company had a significant beat, earnings just pretty much non-factor for this stock right now. So where do we stand right now? The bulls are still trying for their daily trend change attempt. We did get the higher high today, so now we will be looking for continuation tomorrow. If we get continuation, guys, daily trend is in motion right now. Your resistance is set 189, and then we'll be looking to the weekly as well for weekly continuation. Still not losing our weekly levels right now. Still in a very, very healthy weekly uptrend as of currently, right? We'll be looking for Amazon to maintain that. Where I get a little bit worried here, guys, is if we were to break the low of yesterday. Break the low of yesterday, guys, and unfortunately, daily downtrend is started again. I know it's just a very short amount of time, but that would technically be a daily downtrend, and we would be looking for potential further weekly consolidation for Amazon before it might be ready to reset this weekly uptrend. Still one of my favorite companies in the market. Just so much uncertainty is not allowing this stock to fly. That being said, guys, 173 down to 176, this previous area of support should still be holding up for the bulls. A big, big, big weekly level for this stock. Now moving on to Google. Google continuing its slight slide, even though it was up 0.56% today, inside candle with yesterday's trading. Google still trying to find a bottom after its earnings. So still looking for that daily higher low for further trend continuation. Now, in terms of the hourly, how do you know that this move down is finished? Need to see a change in that hourly trend. Look after earnings, guys. Straight hourly downtrend. Now we're finally trying to make an attempt at an hourly trend change. We will see if we can get it tomorrow. If we do get it tomorrow, guys, then your daily higher low is set, and we'll be looking, can the bulls put in potentially a new all-time high? All in all, looking very good for Google. If for whatever reason Google does not cooperate, sets a lower high into lower low, that would just mean, guys, weekly consolidation is already underway. Even if we had only had some gains for one day after earnings into weekly consolidation, would not surprise me with how the markets are shaping up right now. That being said, anything above 131.72, healthy, looking for a healthy weekly higher low for potential further trend continuation. And this location right here, guys, 160 down to about 155, my sweet spot for picking up Google in the near term future. All in all, not looking too bad. Moving on to Meta at this point. So Meta also up 2.1%. Meta still trying to recover from its after earnings crush, right? So still in the context of a daily downtrend. The bulls tried to make an attempt at a daily trend change today. You can see that best by a change to the hourly time frame for the bulls, right? So nice daily bounce attempt right here. That was leg number one. Consolidation, higher low, now going for the higher high. So if we can get into these levels tomorrow, 450, right, with another nice green candle, your daily uptrend will be underway, and then we'll be measuring how much, right, how long can this daily uptrend last, and how long it lasts depends on how much higher they can get. I would really like to see the bulls get back into the 482 level. That'll be previous resistance. And if they can get up there, guys, that'll be a significant move back. It would be about a 61% take back, and that sets them up nicely to eventually be able to reset this back into a weekly uptrend. So Meta still not out of the woods yet. Where I get a little bit nervous is if we immediately lose this movement into tomorrow, set the hourly downtrend, then the potential follow through to the downside may be likely. We'll be looking to 415, and if we lose 415, it's the gap fill area at around the $100 mark. That's where I think Meta stock may just find its actual bottom off of this healthy monthly consolidation for this stock. Now moving on to Microsoft. Microsoft also, not looking the best, but still not too bad. 1.44%, right? Still below our range of consolidation. This 398 line, guys, you see how challenging it is for the bulls to recapture this. So Microsoft still right now in somewhat of a daily downtrend. The bulls are going to be looking to protect these lows tomorrow. 388.69. Lose those, your daily downtrend simply continues, and our weekly downtrend simply continues on Microsoft as well, right? That's not too big of an issue because it's just very healthy monthly consolidation. In my opinion, the worst that can happen to Microsoft stock is if we do continue this weekly consolidation right now, heading back down into the 378, down to about 365. This area right here is where I want to be picking up Microsoft. That will be a sell down from the highs of about anywhere between 12 to 14%, which is exactly what they did last fall among these same macro criteria, right? Heightened inflation fears, interest rates higher for longer, geopolitical conflicts that started last October. right? So those are a few of the things that could happen with Microsoft. For the bulls, guys, it's very simple what the bulls need to do at this point. Once again, need to start a bounce. How high can the bounce be in relation to 412? If you can get a nice size bounce, you may be able to try for the higher low. Trade entry is here for the long. Stops go below down here. And then you will be looking for the 416 is going to be TP1, and then TP2 is going to be your all-time highs for this stock. So that is a little trade idea if you're looking to find a potential level for an entry for a Microsoft long. As of now, guys, it's still kind of buying somewhat of a falling knife. Very, very counter trend trade right now. Taking a long position. Very, very solid company, though. Nothing wrong with the business. Now moving on to Netflix. So Netflix up about 0.19%. Not too bad of a day for them, but still kind of in the same boat as Meta, right? Daily downtrend after their earnings and just not able to do it here, guys. Very, very weak price action. Now, I understand that we're not really losing these lows, but we're also not really setting in motion consistent hourly uptrends. I need to see the same thing as Netflix as I see in Meta. I need to see consistent hourly uptrends from the bulls to really get a daily uptrend back in motion and start recapturing a lot of the damage that was done after earnings, right? That being said, still not daily oversold for Netflix just yet. So it remains up to the bulls right now. Either need to do one of two things. We either need to break above these highs right here, 577. 577 would give us that daily uptrend and the potential at a gap fill. Resistance area is set at about 605, the area of the gap. And if we can get all the way up there off of a daily continuation move of a daily uptrend, I do think that if we get rejected at that point, it creates enough space for the bulls to reset into a weekly trend down the line. So that's what I'm looking for on Netflix. However, if ever we lose these lows in the next few weeks, well, then your weekly downtrend will simply continue in motion at that point, and we will be potentially targeting the low ends of the 500s. I think 510, 500, that is where most of your major support starts stepping in once again, and that is the final area of the gap fill for our prior earnings. This chart looks eerily like how Meta chart looks. Prior earnings gap coming down, this time earnings gap, right? It looks very much the same. So if we do get those gap fills on both of these stocks, those will be great long-term entries. Now moving into NVIDIA. NVIDIA down about 4% on the day today, but still not yet in jeopardy of losing the daily uptrend. Anything still above 784.50, just looking for that daily higher low for potential further trend continuation. Now, NVIDIA had a very juicy sized bounce on the weekly leading into this week. They bounced about 6.8%, 61% of the entire move. So they definitely do have a chance, guys. Even if we were to lose this daily trend, they have a very good chance of setting a weekly higher low for a potential weekly trend change. I do not rule out that possibility just yet, but the bulls do have a bit of work cut out for them. You can see they've been struggling a lot lately with this 850 level. What we need to see from the bulls tomorrow or in the next 2 days is remount above 850, really start breaking these 889s. And if we can do that, guys, the weekly bounce will be very significant. And at that point, any pullback, higher low for further trend continuation, and that would put an end to your current monthly consolidation. If ever, for which reason, we somehow roll over, I do maintain 750 down to 700. Juicy buying opportunity, very nice area for the monthly higher low. The moving average will be curling up into that location as well, and usually NVIDIA does pull back towards the moving average. It doesn't necessarily touch it every single time as it did back here, right? But at least it can curl back into it, give ourselves some more some more respected valuations, as NVIDIA's valuation right now is a little bit rich. And I do think there's going to be a lot of buyers down here if we do come into that low $700 handle. Now moving on to Tesla. Tesla taking a little bit of a breather today again. So Tesla down about 1.8%. That's fine though, guys. A lot of space to set that daily higher low. We are eyeing this current level of support right now, right? Very crucial area for Tesla to maintain. And this is pretty much this green box right here. So anywhere between 180 and the 170 range. Pivotal range for Tesla to maintain. The moving averages are here, and it is your area of horizontal support. Need to see the bulls set a stop to the bleeding right here. Maybe we fill this gap that was set as of 2 days ago, right? Leading in Friday into Monday. Maybe we come down, fill this gap, set the daily higher low, and then make an attempt here, guys, at the trend change. Still not a daily uptrend, still haven't set the higher low into higher high. So looking for Tesla bulls to play some defense into there. If we can get the daily trend change, then we'll be looking to the weekly, guys, as well. can we potentially get, right, when this weekly move tops out? Let's say the daily uptrend continues like this for some which reason, right, into the $200 range, and then tops out. Then we will have our top at 200, set the weekly higher lows, and maybe change the weekly time frame. So the Tesla bulls are starting the trend changes, right? First, we start with the daily, then we start with the weekly, and then we can look at the potential monthly trend change back to the bulls. All of that takes a lot of time, but at least Tesla bulls are now starting the process. So looking very good on that technical recovery. The red flags come in here, guys. In my opinion, if we lose 170 and allow the bears to take back too much of this move, they could be in for maybe at best a tightening range, or at worst, just a rollover back to the bears. Now moving on to Palantir. Palantir not looking that bad, 0.68% to the upside. This kind of looks like NVIDIA as well, right? So nice daily uptrend, trying to set the daily higher low, anything above 20.55, just looking for that daily higher low for further trend continuation. We are still battling right now, guys, with this key level right here. That is going to be your $23 level. Very big area of resistance right now. Previous support, resistance for a lot, and now acting as resistance again. So what you need to see from Palantir bulls is really break and close above this region, set the bulls back in motion, take back most of this weekly move, and set up for the nice weekly trend change as well. However, fairly limited price action before Palantir earnings on Monday. So I don't believe Palantir is going to be able to necessarily break clearly above this 23 level much before its earnings. And I also don't believe it's going to clearly break below 20.34 before the earnings. What's probably going to happen with the stock is maybe just maintain a tight range until Monday. And then Monday, either we're going to flush these lows if earnings aren't well received, tremendous buying opportunity down to 19 if that happens, or if they are bullish, we're going to break this to the upside, guys, reset a few things, daily uptrend back in motion, and also weekly engulfing move would be in on deck for that, for the potential weekly trend reversal, setting the monthly higher lows, and maybe continue attacking this level of $28 on the monthly timeframes. $20, $19, still a tremendous buying opportunity for Palantir in my opinion. Now, lastly, PayPal. PayPal down 2.62% today, still consolidating after their earnings session of yesterday, but still have a lot of space. Anything above $63, still just looking for a daily higher low for the potential trend change. But PayPal tends to do this a lot. It goes on these crazy 3-day rallies and then pulls back a lot and goes into a tightening range, right? You see that all the time. Tightening range right here, right? Big move up, tightening range. Big move up, tightening range. Big move up, tightening range. PayPal's just known for that, guys. It has a lack of follow through. But that being said, we're currently now trying to bottom out, still using these prior highs as support. You can see we're still within that range right there. And we do have a lot of moving average support below us too. So could be a good area for the bulls to bottom out and try and continue this weekly trend, or sorry, this daily trend to the upside. Pull back any more though, and you may just end up in a tightening range. You can see the bears have already taken back 62+% of the move. So could we be in a situation where we maybe just tighten up at these highs right here? Very possible for PayPal stock. The worst case, obviously, is cutting too deep. You set up for the lower high into lower low, and that would kind of ruin our weekly trend breakout. You can see how the weekly candle is shaping up. Not too good, giving back a lot of that weekly move here, guys. We are well underway to our weekly breakout. If we close like this, guys, we may just end up in a bit of a weekly tightening range. PayPal still in a little bit of a transition year for the company, right? So going to be hard for it to break out unless we get further breakouts by SPY, QQQ, and other big tech names that can lift it up. Now, that's pretty much everything for our stock market coverage today. Hope you guys enjoyed that. Now, let's take a brief look into my portfolio and check on what trades I made today into tomorrow as well. All right, guys, so taking a look at the trades made today. Well, it was a fairly neutral day in the portfolio, guys. Unfortunately, all the gains that we made were offset today by one terrible trade, and that was the Starbucks short puts that I had coming into earnings, and I scrambled to close those pretty much at the open here, guys, but we still got absolutely crushed. It opened about 76. I took a $700 loss on Starbucks as a whole, which largely erased all the gains that I had in other positions. Very nasty loss on Starbucks. I am not going to touch this stock, as I said yesterday after the earnings, just not touching much of anything consumer discretionary. until I can see some solid quarter-over-quarter turnarounds. So you win some, guys, you lose some. At least if you can learn from your losses, that's the most important part. The losses are always going to come. How you learn to manage them and manage your emotions as a trader will set you apart from the rest. So you took a $700 loss on these. In terms of Mastercard, if you remember, guys, we got about $1 in premium for these yesterday. We closed them today roughly about 17 cents. So realize about 80+% of the profit. Mastercard obviously ending well above 430. Didn't want to hold them into the Friday session because we are rotating our plays on a daily basis, right? Caesars as well. I was able to close these for worthless. You guys remember these yesterday. So Caesars had earnings yesterday. They were trading at roughly 35 prior to the close yesterday, right? And we wrote the 32.50s and the 33s. You can see that pretty much these contracts, their last traded price, 3 cents and 2 cents. That's pretty much what I closed them for. So pocketed a decent amount of premium here on those Caesars positions from yesterday. Apologies, guys, if I'm not going through the order by order history. I'm trying to keep this one as short as possible. If you want to see the prices that I got all of these at yesterday, just go to yesterday's video at the end, right? So in terms of the Amazon puts as well, so we had Amazon short puts from earnings, and we did some very, very juicy. We made about over $300 on Amazon, right? So half the losses of Starbucks back at least. We closed these roughly almost worthless as well, 5 and 6 cents a piece, and we got some very good premium on those. So very happy with the way that Amazon trade worked out. You can see that those premiums are pretty much ending worthless for the week already. And then on a separate event, I don't know why it says 0, but I do have one Apple call for today. I'm not sure why it hasn't updated as of yet, but I did put on an Apple call towards the end of the day. We got them for roughly 4.3, right? So we paid $430 for an Apple call position. These are the $175 calls for June the 7th. So I gave myself about 40 days of time for Apple, right? Obviously, the week of earnings is very, very volatile. I want to give them a chance. So we paid about $4, $4.20 for those. So remains to be seen what's going to be happening for earnings. This is a counter trend trade, guys. I'm expecting, although a lot of negativity has been around Apple recently, it may just be a case in point where even if they come out with lackluster data, it may just be priced in and the market may respond to anything positive Apple has to say. So counter trend trade here. However, I did write the other side of Apple as well. And you can see that right here. We did go already. Tomorrow I'll be opening probably 1 or 2 more Apple positions. But for now, we went with the 162.5s. We got 62 cents for them. I actually got these while the stock was selling off after Jerome Powell. I didn't wait long enough though because it continued selling off. Could have got close to $1 for them. So we'll see. I'll be adding probably to this position or maybe even a strike higher or lower depending on Apple's price action tomorrow. Now, leading into Qualcomm as well, you can see we did have some earnings for Qualcomm. So we had a couple positions on Qualcomm today. We had 2 155 puts, which we got for 80 cents a pop. Those will likely be worthless tomorrow because Qualcomm currently trading in the after hours for about $170 right now. So very nice win on Qualcomm, about $160 in premium that we captured there. We had another one down here, the 152.50s for about 70 cents. So another $70 there, looking very good on that position. Now, the AMD 140 puts, I did not close them. Probably should have because they were trading around as low as about 15 cents today, but I like AMD at 140. I will probably let this one ride till Friday, even though I could have closed it today because I feel if we get assigned at 140, the bounce could potentially be quite juicy, and I would like to play that bounce with some covered calls. That's why I'm holding this one specifically. It's a high conviction trade for me. We also wrote some Albemarle, lithium mining company, right? So we wrote the 110s for 33 cents and the 108s for 49 cents. ALB in the after hours trading session, they reported earnings and they're about relatively the same as they traded all day. No movement there. Company reported decent earnings, and usually this stock is not volatile at all before earnings, right? And the 110s, 108s are literally at the low end of this pretty much 1 year range at this point, right? 110, 108. That's why I wrote those ones. So those should also end worthless tomorrow. We'll be able to pocket $49 plus $39 on those. And then we have some Square puts that I wrote prior to earnings, just because Square had a significant sell-off today, apparently being investigated for a lawsuit for some of their transactions. The stock dropped about 8% today. So while it was down in these levels over the course of the day, prior to Jerome Powell, I did take a position on Square because earnings are not even out yet, and it's already dropped 8%. I do think they do good on earnings, but we went really low, right? We went about $55 for those. For that position in Square. $55 is really in line with these prior lows back here. So you can see I have a couple positions, the 55s and the 56s, 2 contracts a pop. Got the 55s for 40 cents, got the 56s for about 31 cents as well. So fairly confident. These 55s are for 1 week in the future. I may just add 1 or 2 contracts more to this position tomorrow, depending how price action goes. And as a whole, we still have the SoFi positions as well. Those I will be riding into the end of the week because I really like the levels that I got these at. The 6.5s are almost worthless. It's really the 7s that we may be assigned. If we do get assigned at 7 though, guys, the covered calls for next week are like 30 cents. So juicy. That's why I'm holding the position on SoFi. And that's pretty much it. Nothing else changed in the portfolio, guys. Still have the Amazon Leap call, not cutting that, even though we're up significantly on gains. And I also still have, I maintain the PayPal $75 call in case the markets recover heavily into next week for ever which reason. Well, I'll maintain that call. It's almost worthless now anyways, so I may just ride it out. Even if it doesn't get to 75, maybe if it has a couple of days of rally, maybe I can recapture some of the premium value on this one either. All right, but every time I do take weekly calls, guys, I expect them to go worthless anyways, which is why I wrote a decent amount of premium on PayPal yesterday. I wrote 75 cents worth of cash secured puts on PayPal, which gave me $75, and this call option cost me $100. So all in all, I'm only really net down about $25 on the PayPal speculative position as a whole, right? So not too bad as a whole. Maybe we can recapture some value down the line. So in terms of tomorrow, guys, the ones that I'll be probably playing tomorrow will be Apple, Coinbase, very volatile, guys. If I play Coinbase, I'll probably be playing so low, right? It's about at 208 right now. Coinbase, I mean, it usually has a lot of premium. I probably will only play, if there's premium 30% below price, that's probably where I'll play Coinbase, just to give you an idea of how little I want to be assigned this company. I just don't want to be assigned that company at all. So if I do play it for every which reason, that's the level that I'll be playing it at. Apple, I'll be playing it Square. You guys already know I'm playing it. Cloudflare, I probably will play as well. And this one right here, Fortinet, I will be playing. And Expedia down here, bottom of the corner, I will probably be playing Expedia for tomorrow after earnings. So those are just a few of the companies that I'll be looking into. Same strategy applies, going at least as close as possible to 2 times the expected move for the strikes that I want. So hopefully this video was educational for all you guys. If it was, consider dropping a like. Would really appreciate it for the growth of the channel. And also, if you're new, consider subscribing to us as well. I would love to have you here, guys. Thank you so much to all close of 1,300 of you that have subscribed to the channel so far. You make this journey so worthwhile. And I love each and every one of you for the time that you spend with me day in, day out. And lastly, guys, if you have any questions at all, please feel free to leave them down below in the comments. And as usual, I'm pretty quick on the replies. I'll get back to you within 24 hours. Take care, happy trading tomorrow, and peace.